Hello everyone and welcome to the Nomad Hedge. In today's video we're briefly going to take a look at the DXY or the US dollar index and ask ourselves, is there a possibility that we could see another bear market rally or a reflexive rally in the coming days ahead? Now I'm recording this video on September 7th, so when we look at the DXY here, just if we go back in history, we did have this bear market rally when the dollar index started to move down in July, and then almost here in sort of like August 10th, 11th, that's when the DXY bottomed, and then we saw it rising right after, and that's when the major indices found resistance just below the 200-day moving average, followed by a steep sell-off in the major indices. So let's remove all this clutter here and just take a look at the technicals here of the DXY. So as I said, you know, when the DXY goes up, that tends to be a headwind for the US financial markets, and then when it goes down, that gives it a tailwind. Okay, so let's just have that in mind. But now if we take a look at the technicals, now we did have a falling wedge or a downward sloping line here in the previous bear market rally. But now, as you can see, we do have this rising wedge, and we're sort of like nearing the tipping point of this thing. And we could possibly find resistance at this area here, or possibly around here. But I think this thing here, sorry, the line that goes straight here is the major resistance. And from here, either we could touch this line here, or we could possibly touch one of the moving averages. Previously, it's been the 21-day exponential, or it's been this 50-day line here. As you can see, we had the 50-day support here, we had the 50 support there, we had 50 support there. But overall, it's been this, 21-day exponential moving average that's been acting as major support. But I think this could be a catalyst for another drawdown, even below the 50-day moving average. So if you take a look at the RSI here, which point to overbought levels at around 70, every time we've had overbought levels, that's when we've seen the DXY move lower. And the same thing goes here, see. And then obviously here we had some stallment. So the RSI has been a good indicator telling us when the DXY is getting overbought. And if we take a look at the MACD, we're seeing slowing down in momentum right here, right? So even though this thing is rising, the momentum is going down. So you're giving us early warning here that something in this rally is not sustainable in the short term. So let's move on to a weekly chart here and just show you guys what I mean with this rising wedge. So here, let's remove all the clutter. So here, this is what I mean. Okay, so either we're gonna see this thing go along the lines of this, which is possible, or this thing has another leg up, and then we could possibly see another sell-off. Okay, so even on a weekly chart, this thing is overbought. And we've seen that every time. Now if we go back 3 steps here, like 1, 2, 3, the most recent overbought level is showing some signs of exhaustion, right? We've had a major up here, we had a sell-off here, and then the DXY kept on moving higher. But can this thing sustain itself even higher? Obviously this thing is overbought. That's, we've checked that mark. So we're either gonna touch it here and move down from here, or we're seeing another leg up there, and then we could possibly move down there. Now, I think the most plausible scenario would be this one, because this would be the correct way to sort of like short this rising wedge pattern, because obviously it begins right here, right? So, but one thing that we have to remember is that we have to look at things into perspective. So we have to look at an even bigger picture, and that's where the monthly chart comes in. Okay, so the monthly chart is telling us some very interesting things here. First of all, look at this, okay, and look at this. When was the last time we had this? That was, back in 2015, right? So that gave us a big sell-off of the DXY. We've most likely reached that high level again. And so is it possible, now this is a bear flag. If you look at this in a huge big picture, this is a big bear flag. And every time the DXY goes lower, that's a big, tailwind for the US equities. Okay, so when the dollar goes down, it gives the equity markets a huge boost. Okay, so maybe, but obviously we do have another trend line here, and so we could possibly hit this one before moving lower, right? So there are 2 lines here. We get one there and one there, 2 starting points and 2 ending points here. So either it's gonna be this one or this one. But now I'm looking for a short-term bounce here. So if we go back to the daily chart again, this rising wedge here within the rising wedge is signaling that something is overbought and that we're due for a pullback. Okay, so either this thing is going to be a short term hitting the 21-day, the 50, or we're going to touch the lower end of this rising wedge, and possibly if we're going to move lower. Or the most plausible scenario would be we would possibly have another leg up before moving down again. Okay, so that's the way I look at this. I think now I look at the futures market right now. This is September 7th. We are sort of like in the minor beginning of the greens here. So we had a huge sell-off here on Tuesday, but I think everyone is just so bearish right now. So another reflexive bounce could be possible. You know, we know that the Fed is going to raise rates. The announcement is going to come on September 21st. So maybe, just maybe, we're just going to have another reflexive rally until that date, right? And then we see another sell-off, okay? So that's just my point of view. I just wanted to highlight this so you guys know us about it. And feel free to comment down below what you think about this. I'm going to try to post more videos like this in the future as well, so stay tuned for that. Please hit the like button and subscribe to the channel. Thank you for watching. I'll see you guys later. Take care.